Well, here we go. We are back. We're back making some videos, so I hope you're all doing well out there. And apologies once again for taking a little bit of a break, but it was really nice to have a bit of a break. A bit jet lagged, but we're going to go through what's happened this week. We're going to do a big catch up. So I don't know how long this video is going to be, but I feel like it could be a long video. There's been a lot. When I booked it, when I booked the holiday that I went on, I went, hold on, I've just booked this on probably the busiest week of the year. Why did I do that? So yeah, apologies once again, but it's just funny how things work out like that. It was a crazy week to go away on, so we'll have a big catch up. And what a week it's been. It's been a really, really good week in the market. For me personally, I would say it's probably been one of my best weeks, definitely of the year. Maybe could even come in the top 5 days. It's been a very good week in the stock market. A lot of stocks making positive moves. With that with a bit more of a positive sentiment coming out there. And also, a lot of my companies actually did good earnings, which was really good to see. I was a bit worried that I was going to see at least a couple of them have a big drop on earnings, judging by some of the reactions that we've had so far in earnings, and it didn't actually happen, which was actually really good to see. So we'll go through some of them as well. But yeah, I have shared some snaps with you guys from my trip to New York, as you can see here, and also a little bit of a personal note. I did get engaged, actually. I proposed when we were in New York, so a little bit of a big moment there, I guess, in the personal life. But looking at the stock market, S&P 500, 5% in 1 week. That's mega. That's over half the average return of the S&P 500 in 1 week for a full year. The average return is 8-9% a year, and we're touching nearly 5% this week. That's a very, very good week in the stock market. And obviously, what's also been so good for me is that when you look at the small caps, we talk about this a lot at the moment. We talk about the disconnect between the S&P 500 and the Russell, and we finally had one of those days as well where the S&P goes up and the Russell goes up even more, as it should do. Small caps should move a lot more in the down direction, and they should move a lot more in the up direction, and they've been doing it in the down direction but not in the up direction. So this is good normality to see that the small caps are moving more than the big caps, because that's what should happen both ways, and it has to be doing. So that was really good to see. And obviously a fair reflection on me is that obviously I don't really own too many S&P 500 companies. Obviously for me, I'm more of an individual stock picker for the long term point of view, as sometimes few people do forget, as I noticed the other day. But I'm more bothered where the stock is going to go in the longer term. And when I look, the stocks I normally try to pick are a little bit smaller market cap companies, because those are the stocks that could potentially have the bigger returns. And obviously good to see the Russell performing so well as well. Now, obviously the reason why we've seen a little bit more of a greedy sentiment, you'd say, or more of a bullish sentiment, maybe not greed. It makes sense to have a rally because we've had such a bad 2 week. The last 2 weeks have been pretty awful in the markets. So obviously good to see a bit of a rebound after all that. But obviously the sentiment around the market has got a little bit more positive, I would say. The Fed came out. The Fed did follow what the market was suggesting, which was they're going to hold the rate steady, which is now the second time they've done that, which obviously is something that we want to see. I don't think we need to see the Fed going up any more than what they have done. And they decided to pause once again, probably now reflect until they get a bit more data. I believe they've still got one more meeting in December. Obviously, the Bank of England looked at the Fed and went, "What are you doing over there? Okay, we'll do that." So the Bank of England mostly copied what the Fed was doing. Obviously, the reason why the market is getting a little bit more excited over the Fed pausing and also suggesting that the actual economy growth is going to be a bit better as well, is that the higher interest rates obviously hurt the economy, and as well as that, even just having a consistent interest rates is better than having interest rates that go up and up and up and up. And if you actually look at what happens when the Fed actually stop increasing interest rates, the average S&P return is 16.8%. So this is why it's really big for the Fed to stop pausing for us investors, because when we do see the pause happen, we don't know if this is it. We don't know if they are going to go back to hiking up. Obviously, they played down that they're probably still going to be hiking up. Or Jerome Powell was still talking about it. But obviously, that's why it's key. I think that if we want to see new all-time highs on the S&P 500, we do need to see the Fed stop hiking up interest rates. So it goes hand in hand. The more the stock is down, the stock market is down here, these buying opportunities, really depends on what the Fed are going to do, ultimately, in my opinion, anyway. But let's get on some individual stocks right now. So South Africa, Monday was the day that opened up, and I I was actually trying to see if I can fit in a video at the time when I was on holiday, but I didn't have the time to get it in. But I wanted to talk about these two stocks because Monday I was like, oh, not another week of companies bringing out good earnings and the stocks go down. And we've seen that a lot this earnings season, that stocks bring out good earnings and they go down, and Airtel was exactly that. So probably, I think, the only UK stock that I'm going to talk about today. But the stock actually opened up. By the time it got to about 10 o'clock, the stock started selling down, and it dropped 7.1%. Now, as the week went on, it actually rallied all of it back, but Monday was the day I looked at it and went, why are you going down on those earnings? Like, they brought out the half-year results, and they were fantastic. Ad revenue per user, 9.8%. Mobile money, I thought this was standout. 45% is insane. So good. Revenue up 16.7% on a constant currency. You look at EBITDA increased 21%, and I know there's the impact at the moment with the currency going on there, but that's not going to be a long-term issue and should resolve itself. And when you look at them resolving itself, realistically, this isn't 17 times earnings, not 17 times earnings. This is actually more towards like a 4 times earnings once these constant currency impacts are out the window, which is insane. Like, we're talking about company at an insane value that are just putting up these earnings, which is absolutely fantastic. So, yeah, Monday was the day I looked at this one and I went, no, don't send this down. This doesn't deserve to go down. And then eventually the market did actually start buying it up, which was good to see. Sofi as well. I was going to make a video on Airtel and Sofi because Sofi did the exact same as Airtel Africa. Came out, I think the stock was maybe up 10%, I believe it was, in pre-market. It even opened up a little bit higher. It gave it all back. It actually went negative on the day. And I was like, you can't, this should not happen, and this is the frustrating thing as an investor. And I think I might have said it on the earnings preview. I think I said, like, for me, the big thing in this earnings season is not to get caught up on share price movements when they report earnings, up or down. And even though I just said that exactly on Sofi and South Africa, and I just did the opposite to what I just said, I was trying to go into a mindset of don't get caught up on the share price, because we've seen stocks move crazy amounts on good earnings and go negative on good earnings, and that was exactly what's happening with Sofi. Once again, we've seen a company report 9 out of 10, 10 out of 10 earnings, and the stock went negative on the day, and it was like, come on, give me a break. But as the market rallied up as the week went on, we have seen Sofi go from $6 all the way up to $8, and it has now had a 20% rally. So we've seen Sofi do stupid moves before, but it happened once again. And you look at the numbers that was on Sofi. I mean, EPS was a B. Obviously, they're going to aim for GAAP profitability in Q4, profitable in 2024. That should actually lead them to the point of view that they could potentially be lining up a S&P inclusion 12-24 months down the line, which obviously would be very good to see. Still growing at 26%, which is very good. And this comes off, and I'm actually going to show this a little bit later on. I don't think it's in the next slide. Yeah, it is actually in the next slide. And this comes on a time where I was a little bit worried, because I was looking at a lot, because obviously fintech platforms are just being thrown under the bus at the moment. No one wants to own fintech. And some of their earnings as well have been a little bit weak. And I was like, oh, is Sofi going to show any kind of weakness? They didn't show any kind of weakness, which is obviously fantastic as well. That's when all the fintech stocks are getting killed, and then some of the earnings are a little bit wobbly and this smashes it. It's like, so we shouldn't be bunching this in with the rest of them. So yeah, good to see there. But Paycom as well, I saw their earnings, obviously a big drop on Paycom earnings, one that I do like, and once again made me a little bit nervous around the fintech space. A little bit different because obviously it manages kind of payrolls, but one that I've always been interested in, but the valuation's just been a little bit too high. But looking at the valuation and the growth they're going to offer at the moment, I was like, it's still not attractive now. These sort of, like, it's attractive if they had their all growth, but now it's not. I'll have to dig into this and see how long or how big that slowdown could continue for, because if it does go back to the old growth, then it could become a good value. So something I would have to look into. And obviously we saw Worldline as well. They dropped as well, which, by the way, have you seen the recovery that's been going on there? If anyone did that as a swing trade, yeah, you're doing all right. We saw Adyen as well, show a lot of weakness, and that's another stock that's been absolutely killed in the fintech space. So that's why I was a little bit worried for Sofi, but they smashed it. And I was a little bit worried for PayPal. I was like, oh, are PayPal going to show a little bit of weakness? And their earnings were really good as well. The stock was, I think when the stock actually came out with their earnings, I think the stock was a little bit flat, and then it kind of built up a bit more momentum from there, which was good to see. I mean, realistically, this company didn't need to smash earnings when it's this low. Like, I think it's trading at like 9 times forward earnings now, which is insane. Previously we were expecting near close to double-digit growth, and then if it's growing double-digit growth at these sort of levels, this is absolutely crazy. Like, we should be talking maybe triple the share price of where it is right now. Now, the thing is that there's so much risk to reward, in my opinion, baked into this, that this stock can now grow at 5% a year, and it's actually still good value now, growing at half of what I priced in. I still think if it grew 5% a year, I think I could probably double my share price in this in the next 5 years, which is obviously, really baking in a good amount to, risk to reward here. And then they came out with the earnings, and the earnings were really, really good. The EPS was a really good beat. You look at revenue, came at 8% as well, beat by 20 million as well. Total payment volumes as well was up 15%, which was fantastic to see. The only thing that they also appointed a new CFO. Now, I'm not, because I've only been back for like 5 or 6 hours now, so I've listened to no conference calls this week. So whatever I'm telling you is, I like to give you like little snippets of like or Easter eggs that I've picked out from the conference calls. I've not been able to do that yet, so that's a job for this weekend that we'll get onto. And I'm looking forward to listening to the PayPal conference call, because obviously we have the new CEO talking. Some of you guys might have listened to it already. So I'm looking to see what kind of tone he was kind of giving and direction that he was looking at, which I'm really looking forward to. Obviously appointing the new CFO. The only thing I'll say is the guidance was a little below what I was hoping for. It's still not bad, like 6 to 7% net revenues on a spot basis, and 7 to 8% on an FX neutral basis. And the gap EPS is still very good, but it's obviously, you can see it was a little below the consensus. It was a little bit below my consensus as well for the next quarter. So the guidance was a little bit weaker than what I was hoping for on PayPal. But like I said, they can afford to do that. Like, realistically, like how cheap this company is, I'd be worried if this was a company trading at 30 times earnings, but it's not. It's trading at like 10 times forward earnings. So that you can get away with that guidance at the moment. So that's absolutely fine. So as well as that, when I look at the economic environment out there, and I'm looking at some of the companies that are having a wobble at the moment, I can understand why it has a little bit of a weaker guidance than what's expected. And if they are sandbagging a little bit, I'm absolutely fine with that. So, yeah, I thought the guidance was a little bit below what I was expecting, but when you're at this sort of valuation and you've seen the economic and the macro out there, and you look at other companies, I thought it was fine. So I think they get away with that one, to be honest with you. So, yeah, that was good from PayPal as well at the moment. Moving on to the next one, which is a company I don't own. Worth pointing out, though, SolarEdge Technologies. This is, what a move this one had. I don't know if you saw, but it dropped over 20%, and then it actually rallied all the way back up to where it is right now. So, I mean, it's down 1.8%, but wow, that is some drop and some recovery in SolarEdge Technology. Obviously, we saw them bring out the preliminary earnings, and, they kind of went, hey, just let you know, we're going to be way below what you're expecting, and obviously they were. But even then, the numbers that did come out, it was a little bit like, oh, it's a little bit weak, even looking at these numbers. So even though they pre-warned the market, it was a little bit like, they're still pretty ugly. I don't know if it deserved to have the big drop that it did do, but it's still not great, and it kind of leads to the point of view of solar plays. I'm getting asked about solar plays quite a bit at the moment, and I would love to have a solar play. I think in the next kind of 5-10 years, solar's going to be massive. I would like to have a solar energy stock in my portfolio. It comes down to the right value, I guess. And when I look at SolarEdge and when I look at the likes of Enphase, they both, I believe, are going to have 2 tough quarters left in them. That's because they have the 2 tough overlapping comps still to do. Once they get them out of the way, hopefully they're not, because at the moment these companies are reporting here and analysts are up here. So there's a big gap where they currently are. So once they kind of tighten in the expectations a little bit, and the more seen eye to eye, so there's no more shocker reports, and I believe that will be 2 more reports, because that's when we had still a bit lower interest rates, not tight spending, not a big boom in solar energy. So I think if I give it 2 more reports, I think we should see it settle down there. So for me, a solar play is something that's on my watch list for 2024. So that's a stock that could come in 6 months' time. So this happens quite often, is that if I see a stock that I like, but I'm just a little bit like, I don't know if I want to buy it just yet, or if I want it a little bit lower, or there's this issue that I want to see resolved. I normally give it a target of when potentially I come back and look at it, and I think that will be it. So yeah, we'll see what happens. Melly came out, reported earnings, only up 10% in the last month. This week up 11%. I was like, should we be up more than this once again? I mean, 69 times earnings, realistically. I mean, if forward earnings, it's probably towards a 40-ish, I would guess, right now. I mean, this company smashes it. I keep looking at Mercado Libre and like, this is one of the best stocks that I own on how they're over-delivering at the moment. They're absolutely smashing it. And I always look at it and I go, should I have this as a larger position? Obviously, it's quite a big position in my portfolio, but should it be bigger? Because the way they smash it at the moment is unbelievable. I guess the kind of only risk comes down to more geopolitical kind of point of views, that obviously operating in Latin America maybe gives them more political risk. You look at the likes of Airtel Africa, for example, that looks like that gets priced in for political risk. With Mercado Libre, is there some kind of political risk that you price into the valuation there, I guess, but even so, I'm looking at it thinking, the EPS, I mean, they're beaten by $1.35. I don't ever see a company on a regular basis beat on EPS like how they do. Obviously, it helps that they don't guide for it, so unless they're like, we don't know what to do, so we'll do this, and obviously the miles ahead, and obviously the payment volumes, the payment part of the platform is really helping profitability as well, which is really good to see. But I mean, the profitability is just absolutely hiked up massively, and this is a big thing. I think analysts aren't pricing in how actual cheap this is going to get because of how fast it's growing and how much they're beaten by as well. I mean, revenue up 41% year over year. You talk about payment volume. I mean, total payment volume was up 121% as well, which is really good. Even the gross merchandise volume up 59% year over year on an FX neutral basis. That's insane numbers there. So I mean, really, really good for Mercado Libre. I think it maybe should have been up a little bit more than this, but yeah, I always think like maybe I should buy some more shares in it. Another stock I don't own, Palantir. Really good numbers from them guys, and the stock reflected it on the share price. Looking at them though, I mean, really, Palantir is a stock that has, I think, benefited from what's happening last year. You look at Palantir, and I think everyone's kind of looked and gone, yeah, we probably should, maybe use Palantir platform. So they've had a lot of tailwinds in last year that's really helped them. That you could say is maybe a little bit lucky that it's worked out that way. But hey, that's business. Sometimes things work out better than what you're expecting or worse than you're expecting, and there's that little bit of element sometimes to that it can be a little bit of luck what goes on. And obviously the conflicts that are going on at the moment probably helping at the moment. I still think 17% growth should be a little bit more than that for Palantir, but when you look at the ramp up of profitability, obviously that's going to give them the S&P inclusion, and if anything, I think the sentiment around it is a lot more positive as well now because of what's going on out there, and the bullish long-term sentiment around it. So yeah, doing really, really well for Palantir, and if I was a shareholder, I'd be really happy about that one at the moment. Shopify, I've got to say, this is having a mega week, up 26%. And I've got to say, out of all the companies that I own, I thought their earnings were good. EPS beat of 10 cents, revenue up by 24%. Back to really good amounts of growth after slowing growth or the tough comps that it had to take in 2022. The numbers look really good, like really good numbers. But I look at the guidance. I don't believe, I've not dug fully in, but I don't believe they offered a hike up in the outlook. And I was looking and thinking, yeah, it's good, but this trades at a pretty rich valuation, and it's a beat, it's a revenue beat, but it's no hike on guidance. And yeah, it's good, but when I look at that, 26%. I mean, you could argue that it's been having a bit of a dip recently, so it's just kind of recovering the dip that it had. But I was a little bit like, realistically, this stock's up that much, and I look at the likes of Mercado Libre, which I would say is a cheaper valuation, and the numbers were better, and that's only up 13%. I was like, doesn't really make sense when you look at that point of view. There's a few more that I could have used as an example, but I'll just use that one. And I was like, even me as a shareholder of this company, I was like, I don't really get it. Like I would have got like a 5 to 10% move up, but not that much. So, it's one of those. I think Shopify has always been a bit of a Wall Street darling. Like I think Wall Street have always protected it a little bit more than other stocks. So yeah, it's we'll take it though as a shareholder. I got to stop complaining about it. Apple. So Apple obviously has been from about July time is down around about 10% ish. Today it's down 1%. But for me, I look at Apple and I look at the numbers they're putting in, and it dipped after earnings. The earnings I thought were weak. If it wasn't for services, it would have been obviously really, really bad. But it's, hardly any growth there. Obviously offering a weak outlook as well. And I was looking at it like down 1%. Like I can't believe it. It's trading at 28 times earnings. Like this company is a premium company, and the numbers just don't reflect it. And I know people will say it's Apple, and Apple's always going to have that premium valuation on it because it's Apple. But even so, realistically, I look at PayPal, and PayPal's numbers are a lot stronger, and that's down at 9 times forward earnings. Like, it just doesn't make sense to me. Like, this is, for me, one of the most ridiculously overvalued stocks on the stock market, especially when they're pulling out these earnings. If any other company pulled out the earnings that Apple pulled out, I think they're down like 10% on those earnings. But, once again, I just mentioned about Shopify. I think, Apple's a bit of a, Wall Street darling, and people look after it, and investors look after it, and Wall Street looks after it, and maybe that is a little bit of an element of Warren Buffett. It's a Warren Buffett stock as well, so people are big on that from that point of view. And this one doesn't make sense to me. I feel like this is cheating a little bit. This one should be down. I've seen some companies bring out fantastic earnings and they've gone down more than this, which is the really weird thing about Apple anyway. So yeah, Block, really good numbers from Block. Once again, I was a little bit worried because of what we talked about earlier with a few of the payment companies and the weakness that they've seen, but not happening in Block once again, which is obviously really good. A little bit annoying with Block because this is, talk about share prices. This stock hasn't been the same since the short report came out, and it's one of those that you, as a shareholder, it's frustrating because, what was in the short report, there was so many lies told about a company, and yet, all you get done is hurt as a shareholder of that business, which is a little bit like, frustrating that, someone can tell lies about a company you own and it damages you as a shareholder, and there's no consequences for that, and the stock goes down so much. So, yeah, I think it probably one of those stocks that's up a little bit more because of the situation that it's down so much as well in the last kind of couple of months. But yeah, I was impressed with Block to do the numbers that it did do in this time frame. And the last but not the least, the king, the DraftKings. Honestly, what a company, what a stock. I mean, I'm going to do a full. It just jumped from 9% up to 13% up. I'm going to refresh that. Oh wow, it's actually on a tear today. It's actually now up 13%. Oh my days. I was actually going to say, one of the points I was going to make is that this is one of the stocks that should be up more than this. It should be up a lot more than this. When I've not seen a company like DraftKings, like the only two that are similar are Hims and Hers. They kind of beat on DraftKings levels, and Mercado Libre, they beat on DraftKings levels. But DraftKings, the beats they're doing are just insane. It's not normal for a company to do them beats that DraftKings are doing. The expectations are here, and DraftKings comes in here every single time, and it's scary. It's scary how I'm so happy that I have this as my biggest position in the portfolio, because I look at the numbers they're doing and I get so excited what this company's going to do in the next 5-10 years. It's going to be absolutely fantastic, and the numbers were so good. Like, you're talking 10, 11, 12 out of 10, and it's really good to see because this stock, sometimes you take a lot of crap on a stock, the stocks you take crap on, and sometimes some stocks that you do get wrong, I think sometimes people think you can have a 100% track record when you're doing this game, and there's no chance of having a 100% track record, especially when you've gone through a market that we've had, the worst stock market since 2008. You're gonna get a couple of bruises. you're going to get a few punches in the face. But it's how we come out the other side. And I'm so happy that, I put a big emphasis on DraftKings, and it's really risky when you call it's risky being a stock market picker. When you're a stock market picker, it's really hard because you've got to. You're not a finance channel. You're not someone that comes on and go, oh look, you might not be able to buy fractional shares in your ISA anymore, or this ISA on here is now offering so and so, or look at this change from trading 2 and 2. Those sort of videos are easy to do, and I don't want to offend anyone that does them sort of videos, and every so often I do them sort of videos, but they're easy to do. You're not putting your neck on your line doing them sort of content. When you're a finance channel and you're actually doing stock market investing, stock market picking, you get judged big time off your stock picks. Massive. You get judged big time off your stock picks. And when you've had a year like 2022, everyone jumps out all of a sudden, to call you. You can have the best 5 years out there, and people will forget it in a heartbeat. It's like being a football player. You can have a great football career for how many years, and then you have 1 or 2 bad years, and everyone goes, "Oh, you're crap now." And it's like, well, you forget what's happened, and it could be just a dip in the form. And with DraftKings, it's one of those stocks that I remember getting called every name a year ago. I got called every name a year ago by holding this stock, and when it was $11, a year ago, or where it was there November, $11, and now the stock is up over nearly 200% now. I mean, it's great. It is great. Honestly, I'm so happy. I'm so happy that this stock is doing what it's doing, especially when you put your channel and your brand behind that stock being one of your biggest positions. My biggest positions previously have been fantastic performers. Whether you look at the likes of Microsoft in 2017, 2018, 2019, stock that we were up over 200% on. You look at the likes of Meta, which came a bigger stock in 2019, 2020. Had a bit of a battle with InMode in 2020. Was buying InMode quite heavy at that time frame, but and then Meta, obviously, a stock that's done absolutely amazing over the last few years, and then to go now to a lot higher risk stock than them two, it was a bit more putting my neck on the line, but I had the confidence with it, and obviously I've spent the last 2 years maybe dedicating a lot of the videos to this stock, and obviously now it's up over 200% this year, and it's great. It's really good. And when they are doing these numbers here, I look at it, and the stock, I mean, realistically the stock is up 12% today, but I look at it and go, it should be up more. When you're doing these numbers that they're doing, they're so far ahead of expectations. Realistically, we should be talking about DraftKings realistically being at 52-week highs right now. It should be at 52-week highs, which is the scary thing. But yeah, I mean, it's a great company. I'm excited to see where it goes in the next 5-10 years. It's realistically, when you look at it, it's only getting started. When you look at the state launches, I mean, it's only at 50% of its market. Obviously, we've got the Investor Day they're going to do in 2 weeks' time, and obviously they said that they're going to set out the longer term goals for DraftKings on that Investor Day, and that'll be key to look at what growth they're expecting, what profitability they're expecting. Is there kind of international expansion plans going on there? Is that something that we're going to see DraftKings go further? Is there a new product they're looking to go into? It looks really, really good. So for anyone that has held it, congrats to you for holding the king, because you've put up with some crap over the last 12 months, and you'd have to stick through that $11 to get to where it is now, $32, and realistically, I mean, how long till we see 40? I generally think that we aren't that far off it. When they're putting these numbers up, they're so far ahead of expectations. You're changing your model, you're changing what revenue they're going to do further down, you're changing what profitability they're going to do down the line, and I look forward to it. So congrats to you guys that have held that through all this time frame. Anyway, so yeah, I'll do a dedicated video to DraftKings maybe to tomorrow once I've got time to go through the conference call. But thanks for watching. Thanks for being patient while I've been away and having a little bit of a break. But we're back, and what a week to kind of come back on with all the great moves that we've seen in the market at the moment, and with the stocks that I own anyway. Special Ed 1, you're around here, subscribe. See you in a bit.